Hi guys, it's Compound Interest Stock Guy, and it's 7.2. So again, I wanna emphasize that I'm not a financial advisor, and this is just for entertainment and information on the stock market. Do your due diligence and do not buy anything that I talk about in these stocks. Buy because you like it, like the stock, and you did your research. Anyways, so I'm Compound Interest Stock Guy. Please like and subscribe, or give me a dislike, and yeah. But I want to get into the S&P 500. What is it? That is a good question. So the S&P 500 is based on the top 500 companies in the USA that make the most amount of money per year in revenues. So you got companies such as Apple, Amazon, Facebook, Nvidia, McKesson, ExxonMobil. But what it really is, it's basically based a lot on Amazon and Apple. I believe they're both like at about 5% of the mark of the S&P 500. So if say Amazon or Apple go down a lot, say 5%, that's going to really affect the S&P 500. But if say companies like Nvidia, they go down 5%, it's not going to affect the S&P 500 nearly as much because it has a lot higher percentage ownership in Apple and Amazon shares. So that's why if you look at the S&P 500, it gives you it's a good index and a barometer on where the real market is going, if it's going to go up, if it's going to go down. People use the Dow, and that's 30 different companies. I'm not sure exactly which companies they are, but it's pretty similar. It's a different number than the S&P 500, but it works out similar. So if the Dow goes down, the S&P 500, 99% of the time it goes down, just similar to it. And yeah, so the S&P 500's got the top 500 companies. So in the last 25 years, it's done a lot better than the majority of hedge funds and institutions on their say like mutual funds too. So people that have mutual funds in their retirement or their just their regular trading or investing account, then it does better than the majority of institutions, because it always has the top 500 companies who are always doing really good, and they're growing their revenues and their profits every year. So that's basically what it comes down to, what the S&P 500 is. And so, I mean, it's a pretty safe thing to invest into versus investing into, say, Bitcoin or some marijuana stocks, because it's gonna just the best companies in USA and like Canada is going to have on there. So then it's not going to have just speculation stocks. So it's good in that aspect, but you're never going to have 200% gains in a year on the S&P 500. You're going to get it regular trades about like 15%. That's the average for the last like 50 years or so. That's how much people gain every year, and that's better than all the bank mutual funds. So I don't know, it's interesting, but it doesn't mean that the S&P 500 can't go down. I mean, it's going down right now, and people would be making money if they had puts on the S&P 500 for, say, like long-term puts or even short-term puts. If they put, say, for like a 3 weeks or 3 months or 4 months, in the last like couple months, they had that put options on the S&P 500. If they had, say, I don't know, 20 lots, they'd probably be making a ton of money on those, and that's just basing on expecting that the S&P 500 is going to go down. So, and then when people think that S&P 500 is going to go up, they can do call options on the S&P 500, and they could have it for up to maybe like 6 months or 8 months. It just depends what it says on the menu. When you look into the options on your trading account, you can look into it in any NASDAQ or some TSX stocks. Not all TSX stocks let you do options on, but anyways, yeah, the S&P 500 You can look at it for the last 5 to 15 years on your internet, and it'll show you how much it's gone up, and it continuously goes up generally. And it's something that people really pay attention to, and something that investors need to look at if they're expecting the market to go up or down, and to get a really feel for it, because it really dictates how money gets flown around in other industries. When the S&P 500 is doing really well, then it's more likely that your other stocks are going to be doing good as well. I mean, you can do it from a day point. I know on Aurora cannabis is when it's up about 3% or 4% in a day, then the S&P 500 is generally up about 1%. And then if the S&P 500 is down 1%, then it's generally down about 3%, 3 to 4%. So the marijuana stocks, they'll go gauge it like 3 to 4 times like the leverage on the upside or the downside. So something to pay attention to if you're day trading it or short-term trading it. So yeah, this is Compound Interest Stock Guy, and I hope you enjoyed this video, and give me a like and subscribe for future entertainment, and I hope you enjoy this video. Take care. Peace.